associated with many images in my life, a motor racing driver, socialite, a party boy, good time Charlie, whatever. I'm okay with it. I have no issue, I have nothing to hide from it. I'm in a phase of my life where I want to make a name and I want to create a company which is really a legacy that's going to be left back as a national asset.
Good morning. You're watching Daybreak on Bloomberg Quint Live this morning, and I'm Alex Matthew. First, let's look at the headlines. Asian markets trade mixed as investors Asian markets are off to a mixed start as investors shrug off declines in the US stocks as trade tensions escalate. North Korea confirms its willingness to discuss denuclearization of the Korean peninsula when Kim Jong-un meets Donald Trump. Foreign investors can now buy more Indian debt. RBI eases FPI caps in both government and corporate bonds. And hospitality chain Lemon Tree lists on the primary markets today. Let's take a look at the international markets, and US stocks fell sharply on Friday as worries of a trade war were brewing between the US and China. Wall Street also had to contend with a disappointing jobs data. Abigail Doolittle of Bloomberg News sums up Friday's Wall Street session in this report.
Friday's Wall Street session ended in big losses for the major averages, with the Dow, the S&P 500, and the Nasdaq all falling by 2.2% or more. Now, this came on renewed fears of a potential trade war between the U.S. and China, on increased rhetoric between President Trump and China about that very possibility. Now, this did overshadow a disappointing jobs report for the month of March, but that certainly did not help stocks either. As for breadth, it was bearish. All 11 of the S&P 500 sectors were lower on the day, led by the industrials, perhaps the sector most vulnerable to a potential trade war, while some of the high dividend yielding and defensive sectors outperformed, such as utilities, real estate, and the consumer staples, but they were still lower. That's just how bearish the day was. And the worst drags on the S&P 500, though, they were tech and internet stocks. Apple, Amazon, and Microsoft, and Berkshire Hathaway. This was a big drag as well, perhaps as investors view it as a broad proxy for the economy and a signal that a potential trade war could hurt economic growth. Now, all of this turned the major averages lower on the week, and investors did seek haven assets such as bonds, the Japanese yen, and gold. When you put that flight to safety together with stocks moving sharply lower, Friday's Wall Street session was risk off. In New York, Abigail Doolittle, Bloomberg News.
And one of the most important updates over the weekend in the international space, Donald Trump has warned that there will be a big price to pay for a chemical strike in a rebel-held Damascus suburb of Syria that killed at least 42 people on Saturday. And that's even as the UK and the France called for an urgent meeting of the United Nations Security Council in reaction to the attack. The Syrian civil war entered its 8th year in March. And meanwhile, more than 465,000 Syrians have been killed in the fighting and over 1 million have been injured. Over 12 million, that's half of the country's pre-war population, have been displaced from their homes. Now, President Donald Trump also predicts that China will be the first to buckle as the world's largest economies teeter on the brink of a trade war that sent financial markets reeling. But he hasn't indicated where his assessment has sprung from. Here's Bloomberg's Ross Krasny speaking about President Trump's high-stakes trade negotiation strategy.
It's really unclear, and we don't really know what the provenance is for President Trump to tweet that this morning. It's good to know that he and Xi will always be friends, but saying that China will step down because it's the right thing to do seems a little far-fetched based on what we know. Now, his Treasury Secretary Steven Mnuchin was asked directly about this comment this morning and about whether China has given any sign of a concession since Friday, since the big drop in the markets and since President Trump's latest ratcheting up of trade talk. And he just said, I can't comment. He he is supposed to be leading the talks with China, but he said basically you'll see something when you see it, and couldn't talk specifically about anything that may have happened in the last few days. So, you know, we do feel like the U.S. administration, led by President Trump, is really sort of doing an art of the deal negotiation here. One of my colleagues, Andy Maeda, wrote that President Trump often comes in very strongly on trade negotiations. We've seen it a little bit with NAFTA. We've seen it with South Korea. Comes in very strongly and then ultimately takes concessions that might be less than we expected. So perhaps that's what's going on with China, but, you know, people are pretty worried.
Well, that essentially refers to the tweet that Trump put out earlier in the weekend, talking about the fact that China would remove trade barriers, and they would do that because it was the right thing to do. But let's take a look at the Asian markets now, and they've opened mixed after that particularly bad Wall Street session over the weekend. In fact, a few of the Asian stocks that had opened were trading down. The Nikkei is now trading up about 16 points, or 0.08%. And that's indicating the mixed nature of trade in Asia today. Not the most clear cues going into trade in India, but Darshan Mehta and Agam Vakil are here to tell you what to expect in today's session and also what's happening in the futures and options space. Darshan, first to you, what's it looking like today?
See, the SGX Nifty has managed to recover from the lows of the day. Nevertheless, we're trading with a negative bias. Most of the Asian markets have managed to recover and trading with a positive bias. No doubt, global cues were rather weak, but the SGX Nifty is indicating a downtick of 21 points, which would probably change by the time we hit opening session. As far as ADRs are concerned, most of the ADRs ended with a negative bias. Vedanta and Infosys were down. Vedanta was down 3.5%. Infosys, Dr. Reddy's, HDFC Bank, all of them falling in close to 2.5% in trade. Wipro was the only one that was down 1%, but overall a pretty bad day for the ADRs on the US markets. As far as crude is concerned, crude has managed to stabilize in today's trade, but WTI is below the $63 barrel per mark. It's coming in close to the $62 barrel per mark. It was up, it was down almost almost 2.5% on Friday's session. So there is clear weakness that's seen as far as crude is concerned. Base metals, mixed closing by the base metals on the LME. Aluminium was up almost 1.6%. Nickel and lead were the other two commodities which managed to end with a slight positive bias, but copper, nickel as well as zinc were the ones that were down in trade. As far as China is concerned, after many days of holiday, the Chinese markets have finally opened, so you can see aluminium is trading much higher, reflecting what happened on the LME, but the other metals like zinc and copper are trading with a slight negative bias. Most of the precious metals are also trading flat, gold with a negative bias, while silver, platinum and palladium are trading with a slight positive bias. Now, what happened in trade, if you're looking at the fund flows, FI sold in 525 crores, DIs were massive bias to the tune of almost 1300 crores in the cash market. Now, if you're looking at what happened with individual counters, the Nifty Bank was up 0.5%. More traction was seen on the mid cap and small cap front. The small caps up almost close to 1%. Some of the sectors in focus, the metal index was down almost 1.4%, but PSU banks and auto managed to recover in trade significantly. Now, as far as the VIX is concerned, VIX was absolutely flat in trade. 14.75 is where the VIX was, and the Nifty was up almost 6 points. So HDFC Bank, ICICI Bank and ITC managed to move up. Infosys, L&T and Bharti Airtel were the ones that managed to move down. But Agam is here. Agam, what are the FNOQs indicating?
Well, Darshan, we did see flat moves, at least as far as the Nifty is concerned, and we really didn't see too much change with respect to the underlying variables. As you can see from the open interest, about a 3% increase there. Coming down to the Nifty Bank futures as well, what we're looking at is a slight decline in terms of open interest, considering the fact that we hardly saw any up move. That said, moving in, what are we keeping an eye on? The India Volatility Index, again, little change, and it's the same for the Nifty put call ratio, currently standing at around 1.44. But moving in, in terms of the way we've seen changes in open interest towards the strikes, it is the 10,300 put, which has seen a little more writing coming along, considering the fact that we saw the Nifty move up about the levels. In terms of stocks, of course, so we're watching out for something like a Jet Airways, which moves into the F&O band. But, among several other stocks, we have Adani Enterprises, which sees fresh longs. And we've also seen fresh longs in something like Jubilant Foodworks. Good, in fact, good 25% open interest added even in the last session as well. So some stocks to keep an eye on, but of course we'll also have to see how the global cues interpret data and what implications that may have on our road markets.
Absolutely. Thanks so much for that, Agam. Let's turn to the rupee and the bond market now, and Saloni Dhanuka has all the updates there. Morning, Saloni.
Good morning, Alex. So the rupee on Friday surrendered all of its initial gains and ended steady at 64.97 levels against the dollar. Now, if you see for the week, the domestic currency strengthened by a good 21 paise against the dollar after 2 straight weeks of decline. Now, also, country's foreign exchange reserves on Friday has hit a lifetime high of $424.4 billion mark for the week ended 30th March. Well, speaking of the bond market, sovereign bonds posted their biggest weekly gain since November 2016 on Friday after central bank lowered its inflation forecast for financial year 2019, and hence we have seen yield on the 10-year benchmark security dropping nearly 22 basis points last week to 7.18%, and for the on Friday yields rose nearly 5 basis points to end at 7.18%. Now, in terms of flows into debt market, global funds increased their rupee debt holdings for the 3rd consecutive session on Friday. They infused close to 980 crore according to NSDL data. Well, on the global front, dollar fell versus most of its G10 peers on Friday after weak jobs data. Now, the index ended 0.4% lower. However, it is now trading marginally higher in the early Asian hours near 90.20 levels. And lastly, speaking of dollar rupee, now it is trading at 64.93 levels against the dollar in the non-deliverable forward market, which indicates a flat to positive opening for Indian rupee today's trade, Alex.
Thanks, Saloni. Shifting focus now to the currency market, rather from the currency market to the commodities market, Jayesh Khilnani joins in with all the details. Jayesh, what do you have for us?
Morning, Alex. So let me start off with oil prices. Now, Monday morning, oil is actually seeing some bit of gains. But remember that on Friday, it did actually slump more than 2%. In fact, it posted its biggest weekly decline in over 2 months now. We also understand that hedge funds have also reduced their net bullish positions on Brent crude oil. So we'll have to wait and watch what actually plans out in the oil market. But as far as the base metals are concerned, we saw a mixed close on Friday. The base metal index closed largely flat. Now, this is on the back of the trade war concerns that we got on Friday, backed by which equity markets did decline. Now, US and China have said that there is no trade war, but they have actually guarded themselves on peace talks as well. So backed by this, aluminium actually soared amid fears that Russia could sanction the sanctions imposed by Russia could create some chaos in the aluminium market. That was up about 1.6%. From other base metals, we had copper, zinc, and nickel, which declined in trade, while we had lead, which ended higher, and tin closed marginally flat. If you look at the Shanghai Futures Exchange, the trading has just resumed at about 9 a.m. Shanghai time, so we are getting mixed cues from there as well. As far as the precious metals are concerned, we saw that gold actually closed about 0.6% higher, and seems like the haven buying has resumed once again.
Thanks for that, Jayesh. Now, moving on to the latest issue to talk about, and I'm talking about the IPO of Lemon Tree Hotels. It's all set to list today. The IPO, though, saw very little participation from the retail investor. The 1,040 crore issue was subscribed about 1.2 times, primarily on the back of institutional interest. Saloni Dhanuka is back to tell us about Lemon Tree's business portfolio and also its likely valuations on listing. Saloni, over to you.
So, Alex, Lemon Tree Hotels' initial public offer finally sailed through on the last day of subscription. Now, all thanks to institutional support, which was subscribed nearly 3.9 times, while it got poor responses from the retail as well as HNI investors, which was subscribed a little over 10% each. Now, in terms of overall subscription, the IPO could manage a subscription of 1.2 times on the overall basis. Now, in terms of valuations, if the stock lists exactly exactly at the issue price of 56 rupees, it will command a market cap of nearly 4,400 crore. Now, dealers are predicting that this IPO is likely to list at a discount, and if it were to list at a 10% discount, say at 50 rupees, the market cap would be around 3,900 crore. Now, considering if the stock is listed at a 10% premium, say at 62 rupees, the market cap would be around 4,800 crore. Now, given the market cap scenario, the enterprise value to EBITDA, that is the operating profit ratio, will vary in the range of 40 to 49 times, which is still expensive as compared to its peers. Now, in terms of business, Lemon Tree Hotels is India's largest hotel chain in the mid-price segment. Also, the company operates directly some own hotels and as well some hotels on the basis of lease agreements. Now, in terms of brands, in terms of operations, Lemon Tree Hotels had nearly 4,700 rooms in 45 hotels across 28 cities in the country as of Jan 2018. And in terms of different brand segments, they operate under three categories, namely Lemon Tree Premier, which is their premium segment. They operate upper to mid-scale hotels in this particular segment, while they operate Lemon Tree Hotels under the mid-scale segment, and lastly economy into the Red Fox. Now, as you can see here, as of Jan 2018, majority of their business comes from their mid-scale segment. Now, in terms of revenue composition, owned hotels contributes the most, which is nearly 63% of their top line. Now, remember, the Lemon Tree Hotels owns nearly 20 hotels out of 45 hotels, and higher share of owned hotels only means higher capital intensive business for the company. Now, in terms of bottom line, the company has seen a turnaround in the first 9 months of financial year 2018 after seeing losses for the several past years.
Saloni, but how does Lemon Tree compare with its listed peers?
So, Alex, the closest competitor for Lemon Tree Hotels is Royal Orchid. Now, this is of course in terms of their business profile. We also have Indian Hotels as well as EIH in this space. However, we have not included in this comparison, given their majority of their revenue comes from their premium segment, while for Lemon Tree, majority of revenue comes from the mid-scale segment. Now, in terms of occupancy rate, Lemon Tree Hotels has the highest occupancy rate of nearly 76% as compared to the industry average of nearly 65%. And it is not only the highest, the company has also maintained their occupancy since FY15 to FY17. Now, on the flip side, if you see their F&B revenue, which is the high margin business for a hotel segment, it is the lowest for Lemon Tree, which is nearly 21% as compared to its closest peer, that is Royal Orchid, which is nearly 32%, and the industry average is roughly around 40 to 45%. Now, finally, in terms of valuations, if we compare Lemon Tree Hotels on their enterprise value to EBITDA ratio, it is the highest. It trades around 45 times its operating profit for FY17 as compared to Royal Orchid and the industry average, which is nearly in the range of 15 to 30 times, Alex.
Right. Thanks for that, Saloni. Shraddha Babla joins in now with the stocks in news. Shraddha, what are the stocks on your list today?
Good morning, Alex. Starting off with Tata Chemicals, which has acquired a company called Allied Silica for 123 crores, a deal which is expected to be closed within 3 months. And this acquisition also includes an existing manufacturing site in Tamil Nadu. Titan has shared its quarterly update, where it has said that the entire FY17-18 fiscal year was very satisfactory in terms of the overall business performance. More importantly, the retail sales growth for the jewelry division for the quarter was in mid-teens for the division, so that's what we're tracking. Inox Wind, they have won a 100 megawatt in the SECI 4 auction, and the bid has been won at a fixed price of 2.51 per unit for a period of 25 years. And with this, the auction-based order book of the company increases to 950 megawatts. We're also watching ITI Limited, which has received a cabinet approval to issue 18 crore fresh equity shares to the public, mainly to be able to meet that 25% public shareholding requirement to meet working capital needs and also reduce debt. Sri Renuka Sugar is another one that we're tracking. The board has said that they will divest their Brazilian operations in due course. That apart, SmartLink Network Systems has announced a buyback of 56 lakh shares at a price of 120. That's about 15% premium to the closing price on Friday. Watch out for that name. There's also an ET report which says that HDFC may buy Apollo Munich, the health insurance venture of the company, for about 1,000 crores. So watch out for developments on those front. And lastly, another ET report says that Max India is in talks to buy 47.5% stake in Max Healthcare that is currently being held by its South African partner Life Healthcare Group Holdings, and that is for an amount of anywhere between $450 to $500 million. So watch out for Max India as well, Alex.
All right, thanks so much for that, Shrita. And Somit Sarkar is standing by with the big brokerage calls of the day. Somit, what do you have to tell us about today?
Good morning, Alex. On the big brokerage calls for the day, first we have is Deutsche Bank market research on Kotak Mahindra Bank. Now they have raised the rating on the stock to buy from hold and hiked the target price to 1,280 from 1,100. Now according to the brokerage, growth momentum for Kotak Mahindra Bank is improving with its liability strategy paying off. The bank is now moving to a high loan growth phase where the loan growth is expected to be more than 20% for the bank. The bank is best placed to benefit from the financialization of savings with growing customer base and diversified product portfolio. Now, the brokerage is expecting the bank's return on asset and return on equity to improve to 2.4% and 17% by financial year 2020 versus 2% and 15% in financial year 2018. Now it also says that the subsidiaries of the bank such as the insurance, mutual fund and the broking are at a critical stage, and going forward profitability is expected to improve for them. Lastly, it says that the expensive valuations of the bank are justified given the fact that growth is returning to the bank. Second we have is Macquarie on Jubilant Life. Now the brokerage has maintained its outperform rating on the stock with a target price of 1,096, which suggests a potential upside of 34%. Now according to the brokerage, as the surge in the LSI space or the life science ingredient space is decreasing, the specialty business will be back in focus for the company. Now the brokerage is expecting Jubilant's pricing in the LSI segment to gradually taper down in the fourth quarter of financial year 2018 and in the first quarter of financial year 2019. Now the fourth quarter is expected to be solid for the company on the back of a pickup in specialty business. Lastly, it says that the valuations look attractive for Jubilant Life, which remains the top mid-cap pharma pick.
Thanks, Somit. Moving on now, Justice Jasti Chelameshwar, the second senior-most judge of the Supreme Court, has said that the lack of a response from the government on the collegium recommendation to elevate Justice K.M. Joseph to the Supreme Court is a matter of concern. Listen in.
We think in a democratic society, periodic audit is always necessary to see whether we are progressing on the right lines or not. No system created by human beings can be perfect. This country experimented with a particular system of appointments till the second judge's case, what we call as, popularly known in the legal circles as the second judge's case, that 9-judge bench judgment, where this collegium system was introduced. Thereafter, it was a different experiment for the last about now 25 years. There are always problems. The question is, democracy, we keep experimenting with it. Undoubtedly, the Chief Justice would have the authority to constitute the benches, but under a constitutional system, every power is coupled with certain responsibilities. The power is required to be exercised, not merely because the power exists, but for the purpose of achieving some public good.
Now, with the IPL back this weekend, cricket is back front and centre. And you've probably seen the likes of Virat Kohli and AB de Villiers score hundreds at will. But I'm sure you've wondered what makes the bats that they use so special. Here's a look at the factory of India's largest sports equipment manufacturer. Well, there's lots to talk about over the course of the day. International markets, how our Indian markets will pan out, and you'll find all of that on Bloomberg Quint Live. But there are also several stories that you should consider reading on the website bloombergquint.com. Here are just a few of them. SBI General Insurance, a subsidiary of State Bank of India, expects to wipe out accumulated losses during the current fiscal and may go in for a listing next year. The Commerce and Industry Ministry has convened a meeting on the 11th of April to discuss issues pertaining to foreign direct investment in the tobacco sector. Industry body COAI expects earnings of mobile operators to remain depressed for another 3 to 4 quarters on account of competition in the sector. Moving on, with a fast-growing middle class and increased usage of internet and mobile broadband, there is a high demand for affordable and quality healthcare in India. And healthcare startups are trying to make everything from pathology to billing more smart and efficient. Here are 5 Indian healthcare startups that are redefining the sector. Take a look. Well, that's all we have for you on this edition of Daybreak, but up next is all you need to know going into trade today. So do stay tuned. This is Bloomberg Quint.